Welcome to this video on whether Trump is destroying the Fed's independence. Next week and in the coming months, the US Federal Reserve, the Fed, is unlikely to cut its interest rates further. On the one hand, the unemployment rate remains very low. On the other hand, according to surveys, consumers' long-term inflation expectations have risen massively. This can quickly become a self-fulfilling prophecy. Donald Trump is upset about the Fed's refusal to cut interest rates. On social media, Trump insults Fed Chairman Jerome Powell as Mr. Too Late. In the past, presidents such as Johnson or Nixon have also exerted massive pressure on the central bank, which explains the high level of inflation of the 70s. But they did it behind the scenes, not publicly. In this respect, Donald Trump's outbursts against Jerome Powell represent a breach of taboo. Nevertheless, Trump is unlikely to dismiss his central bank chief in the end. If he did it, he would probably trigger severe market turbulences. For investors, the dismissal of the Fed chair would be a sign that the Fed is no longer resolutely fighting inflation. Inflation expectations would rise massively, and so would US Treasury yields. Trump will probably not want to take this risk. Instead of dismissing Jerome Powell, Donald Trump is likely to replace vacant positions of the Fed board with people he likes. Jerome Powell's term of office ends in May next year. Ultimately, this personal policy, as well as massive public pressure, is eroding the independence of the central bank. This poses an inflation risk and argues for higher bond yields and a weaker dollar in the longer term.